Hong Kong's economy grew slightly in the first quarter of 2015. Real GDP expanded 2.1% over a year earlier, slightly slower than the 2.4% growth in the preceding quarter. Domestic demand fared relatively better and remained the key source of economic growth. Private consumption expanded moderately in the first quarter by 3.5% over a year earlier. Headline consumer price inflation slowed to 4.4% in the first quarter from 5.1% in the fourth quarter of 2014. Total goods exports in the first quarter grew marginally by 0.4% year-on-year, slightly down on the preceding quarter's 0.6% rise. Services exports extended the decline in the first quarter, falling by 0.6% over a year earlier, after the 0.3% drop in the preceding quarter. The main drag on services exports was the setback in travel service exports, being marked by weaker visitor spending and a visible slowdown in tourists coming to Hong Kong, which dropped to a low single-digit level in the first quarter. The government said it will stay vigilant to the impact of the recent slowdown in tourism.
The slowdown would affect the retail trade and other tourism-related sectors. Given that the inbound tourism sector accounts for some 6% of Hong Kong's total employment, the slowdown, if continued, could have implications for our labour market conditions, to which we need to stay alert.
The residential property market saw further signs of exuberance in the first 2 months of 2015, but cooled down somewhat after the Monetary Authority introduced measures on tightening mortgage loans in late February. Overall flat prices in March exceeded the 1997 peak by 69%. The government revised its full-year headline inflation forecast for 2015 to 3.2% from 3.5%. While the underlying consumer price inflation forecast, as set out in the budget, was lowered from 3% to 2.7%. The GDP growth forecast of 1 to 3% for 2015, as announced in the budget, is unchanged.